Hello, today I'm going to be comparing VT to VTI and VXUS. So to begin with, VT, VXUS, and VTI are all ETFs, which you can think of as a basket of different stocks that we can buy so that we do not have to buy a ton of individual stocks. They are all Vanguard funds, which means Vanguard offers all these ETFs. And here is a look at VT and VXUS. You're going to see that VXUS tends to underperform VT. And the main reason for that is VT is an index that tracks the entire world's stock exchange. So it mainly tracks the US stock exchange because that's the biggest stock exchange in the world, but it also tracks other stocks from around the world. So it has both US and international funds. And you can think of VT as the total global market. VXUS, on the other hand, is only the stocks that are outside of the US. That's what the name is. V, Vanguard, and X is for like excluding, and US is the US stock market. So VXUS tracks all the stocks that are outside of the US. And as you can see, in the last 10 years, VT, the entire total market, has outperformed VXUS. And this is mainly just because the US stock market has outperformed the rest of the world's stock market over the last 10 years. So now let's take a further look at comparing VT and VXUS. If we move down, we can see that they both have a 0.07% expense ratio. Here and here. That means that the amount that you pay per year is 0.07%, and that goes to Vanguard. That means, let's say you had $1,000 in VXUS or VT. Every year you'd be paying Vanguard 70 cents. I do believe that VXUS's expense ratio is wrong on this site. I think it's 0.08 from Vanguard's actual site. So the slight edge goes to VT in the expense ratio. 0.08 from VXUS is slightly higher than 0.07, although it's pretty much the same. And if we go down, we can see their dividend history. And this just tracks what the dividend generally looks like from both these funds. And you can see that the edge here goes to VXUS. They do consistently pay about a 1% higher dividend, although it definitely fluctuates. So I wouldn't say this is like they're reliably going to pay about 1% higher. It's just on average, we can kind of see that it looks like about 1% higher. Now, looking at all this data, even with the higher dividend yield, it's clear that VXUS is not as good as VT in terms of like share price appreciation, even if you factor in the slightly higher dividends. So why would you want VXUS instead of VT? Well, the main reason comes from also looking at VTI. VTI is another fund that tracks the US stock market. So you can kind of think of VT as like a combination of VTI and VXUS because it's basically just those two funds put together. It's VTI, which is the total US stock market, combined with VXUS, which is all the stock markets outside of the US. As you can see, VTI outperforms VT, and that's again just because the US stock market tends to outperform international stocks, and VT, although it does have US stocks, it also has international stocks, so that's why it's slightly underperforming. And if we look at the expense ratios again, VT, as we looked at before, has a 0.07% expense ratio, but VTI has 0.03%, so much lower. That's less than half the expense ratio. If we look at the dividends, VTI has a lower dividend yield. This is kind of to be expected because VT is a combination of VTI and VXUS, So that's kind of why it has like in the middle of their dividends. It kind of has like a dividend yield that kind of represents the middle of VTI and VXUS. But the interesting thing here is because VTI has a 0.03% expense ratio, it would actually be cheaper to buy VTI and VXUS instead of just buying VT. Unless you're buying a ton of VXUS and only a little bit of VTI, it just makes more sense to buy a combination of VTI and VXUS instead of VT, because you're probably going to get a lower average expense ratio. And generally, you probably want more VTI than VXUS because VTI represents the US stock market, which is a lot bigger than the rest of the world. So if you're trying to emulate the size of the world's market, you would have like a larger holding of VTI, probably at least like 60 or 70%, and then you could do something like 40 or 30% VXUS. Another question you might be asking is, if VTI just seems to perform a lot better, why would you even need VXUS, or why would you even want VT? Because it looks like, based on the last 10 years and just historically, VTI tends to outperform. And the main reason for that is if you're looking to diversify into international funds. If you're okay with being solely based in US stocks, then sure, it's fine to only buy VTI or something like VU. But if you want to have international exposure and kind of give yourself a little bit more diversification into the rest of the world and their markets, that's when you want to think about VT or VXUS. And so in that case, if you're looking for that international exposure, it might make more sense to buy VTI and VXUS, some combination, like maybe you want 75% VTI and 25% VXUS. It's really up to you depending on how much you want your weighting in the US versus internationally. So if you want to focus more on the US, you could do something like 80% VTI and 20% VXUS. Or if you want it more split, you could even do it 50-50, 50% VTI, 50% VXUS. But in all those cases, it just makes more sense, expense ratio wise, to buy a combination of VTI and VXUS instead of buying VT. That is if you care about the 0.03% sort of difference between them. If you don't really care about like the minute fee difference, then you could just buy VT. Like if you value the simplicity of buying one fund, VT might make sense for you. But if you want to save a little bit on fees and you want to have like a little bit of more of a say in how your ratio for international to US stocks is, then you can buy VTI and VXUS and split it up however you feel is appropriate. And so I hope that helped, and thank you for watching. Bye.